Congratulations. Joining me today are the Thesis CEO and Mezo founder Matt Longo and Mezo founding contributor Harshan Singh, aka Yogi. Welcome, guys.
Hey, good to talk to you, Jacqueline.
Hey,
So
thanks for having us.
Yeah, of course. Before we get started, I want to start with some background and context. Mezo has made significant strides over the past quarter as it built the foundation for BTCFi, bringing Bitcoin's deep liquidity into a more productive and composable financial layer. Most notably, it has launched Mainnet, its Bitcoin-backed stablecoin, MUSD, introduced the MUSD Vault to enable passive yield strategies, and expanded access through integrations like Upshift and Threshold. To start off, though, Matt, can you walk us through Thesis's journey from building Fold, acquiring Lolly, to launching Mezo? How do all these moving pieces kind of fit together and help your mission of transforming Bitcoin from
Yeah,
store of value into a productive credit asset?
of course. Yeah. So, the reason that I got into this space in late 2013 was that I launched this like side hustle, which was just like buying and selling gift cards online. And it was doing okay. But then I got deplatformed. And so my introduction to Bitcoin wasn't economic. It wasn't Sailor. It wasn't cypherpunk. It was just pure necessity. I needed an alternative. And this was before we had all of the great, payment infrastructure we have today. This was before stablecoins. And so I found Bitcoin. And I said, okay, well, if PayPal won't have me, I'll just pay users directly with Bitcoin. That became Fold, which went public earlier this year. It was quite a journey from left to right. And what I learned along the way was, for years I was using Bitcoin for payments. And I kind of saw firsthand that people didn't want to pay with Bitcoin anymore. And part of it was that it's expensive and that it's difficult. Sure, people like to talk about like the UX needing to be improved. It's true, of course. But the real issue is simple. People realize that Bitcoin is for their savings. I don't want to be the next Bitcoin pizza guy. I don't want to, and actually looking back at Fold, I think we went through almost $450 million in today's dollars of people buying coffee from us in early Fold days. So you look back at that, and I mean, I don't feel guilty. People can do whatever they want with their money. But I do wonder, like, well, what if we hadn't done that? And what if we had switched to earning earlier? So since Fold, I kind of had this like really intense personal lesson on, what economists call Gresham's law. You don't want to spend your gold on your latte. You don't want to spend your Bitcoin on your latte. You want to spend the cash. You want to spend like bad money on your day to day. And then you really want to hold your strong money. And the strongest collateral and the strongest money we have is Bitcoin. So since then, a lot of the work we've done at Thesis has really been internalizing that. How do we make Bitcoin easy to help finance your home? How do we make it so that you can earn it and then borrow against it? And so that's what's eventually now recently led us to buying Lolly, which was a Fold competitor for years and is like they've banked hundreds of thousands of people they've kind of introduced to Bitcoin. I'm getting used to saying we. I'm not used to owning this thing yet. Alex and the team have done a fantastic job over the years. And then with Mezo, what we're doing is we're taking these people who they've been introduced to Bitcoin and they've been holding it for years. Now they have all this buying power and we want to help them use it. We want to help them borrow. And I don't mean at 15% from Cantor. People lately are saying Bitcoin is the strongest money. You should be able to borrow against it. And then they're offering you rates that are like payday, they're credit card rates. And so with MUSD and Mezo, we're trying to give people something that they can actually finance their life on. 1% loans indefinitely. They're not fixed term. And the idea is that you've made the best financial choice you can possibly make. You hold Bitcoin. That's your Black Amex, and now we want to make it so that you can buy your groceries, finance your home, make your next investment without selling, without making the mistake I helped so many people make early in my career.
Yeah, I feel like the evolution of kind of what you talked about has been really big. And with that in mind, I think about like the Bitcoin lending landscape, right? And I think that area has changed a lot over the years too. where do you kind of see Mezo fitting into the current BTC Fi ecosystem? And obviously,
Sure.
Yogi, feel free to chime in with Matt as well.
Yeah, I mean, I guess my take, and Harshan, I want to hear from you too, man, on some of this is like, I think that so I'm kind of trying to scratch my own itch, which is literally I finance my house with Bitcoin, and I've talked to a number of other people who have done this, and the way that we did that was we used another product of ours, TBTC. I took a loan out on it, but now the loan, because it's a DeFi loan, and because I don't like the idea of going to a banker for my financial needs, it's variable rate. And so what's interesting is the second the market goes up, I'm paying rates that are not appropriate for a mortgage. The market goes down and I'm getting great rates. So that for me was kind of the impetus for this direction with Mezo. Is like, well, what we're looking to solve is not just people who are seeking leverage. Like, we don't want to become the next Genesis order book. The idea of being the next BlockFi is quite exciting, but maybe without the rehypothecation and the risks. We're looking for people who are making long-term purchases and aren't doing things that are just cyclical.
Yeah, and I think on my end, it's purely the finance side. I think that I sold a bunch of crypto in 2018 to buy my first house, and mostly because I would go and try to show it as like equity that I have, and they're like, this doesn't count. And then I'd cash out, and they're like, where'd the money come from? It was like a whole thing just to get the insurer to underwrite my loan or my pre-approved application. I forget what they're called, for the house. And so now that we look at it, I look at it as, hey, stable coins are decentralizing banking in a way. Like, if you go to a savings account today, you could go to Wells Fargo, US Bank, et cetera. You get 25 bips of yield, even though the rates have been 5 to 6%. And then you have these neobanks like Ally, where they'll give you like 2%. And then you go to Marcus and maybe you get 4%. And now with BTC, it's like, all right, this is an asset class that it is finally starting to get recognized. I think we really hit the narrative, like, for once. Like Matt's usually very early to a lot of these narratives. This time it was like perfect timing. Like, we're thinking about this. You now have Fannie Mae, Freddie Mac thinking about Bitcoin mortgages, et cetera. Like, this is going to become a pristine asset to borrow against. How do we make it where the user doesn't need to custody funds with a third party, not be able to get the direct rates given that it's their own capital? And for a lot of large funds, they're sitting on 100 billion, 10 billion, like from 10,000 to 100,000 Bitcoin, and they can't really earn yield on it. So it's like, how can you make it a productive asset? How can I borrow against it and go trade and do speculative things that will lead to yield? And I think people often forget that yield comes with risk. You don't ever get a risk-free rate. The only risk-free rate that exists is the US government printing money and you believing that that money is always going to hold value. And so that's like the crux of where I find a lot of excitement with what we're building.
So, like, to answer your question, I think, where do we sit with Bitcoin Fi? I think the answer is it's Bitcoin Fi for adults. We don't want to replay Ethereum. We're not looking for food coins. This isn't Pump. We're looking for people who are ready to kind of move on with their lives and not just be in the trenches, but actually like buy a home, buy a car, buy groceries. And we're looking to help larger players. We're looking to help exchange traded products find yield, but also get access to their equity.
Yeah, I think you guys make really good points on that front. And I think about kind of the transition from like passive to active. And when it comes to kind of creating these products to make Bitcoin holders more active, how do you kind of think about that from Mezo's perspective? Giving holders the opportunity to be financially productive, but also encouraging those who are less likely to be active and are just like passive holders.
I think that it is really easy as a Bitcoiner to sort of stick it under your mattress. And I get that, because for a long time, my Bitcoin wasn't my play money. I mean, it's still not really. It's the money I plan to pass on to my kids. Like my house, I don't know what that's going to be worth. I have no idea what any stocks. I definitely I'm short on USD, so it's like, well,
Hopefully
what can I really pass down?
Right.
Yeah. I mean, it's like, everything will go up, but will it go up as much as Bitcoin? Will it actually last, shocks? And so I think what I've tried to help like old school kind of Bitcoiners who I think are, 100K, they started waking up because like this is something that we all talked about years ago, and it's not a million, but it's, and I think helping them realize like, why are you full stack selling 8 billion in Bitcoin? Do what rich people do, which is you borrow against your assets. Like this is how Elon Musk funds his life. And if DeFi can do anything, if it could take these tools that the wealthy have used to sometimes in some jurisdictions avoid taxes, to avoid selling an asset that they think is going to go up, and to create more wealth more widely, like that's winning. Separate from decentralization, separate from censorship resistance, just making these things accessible is winning. So that's really how I've been talking to Bitcoiners. Like, hey guys, you have a long time horizon. I do too. That doesn't mean you shouldn't be able to buy your family a home. That doesn't mean you shouldn't be able to eat. It's time. It's time to start borrowing.
Yeah, I think like on the front of collateral opportunities, the lines of credit, it's like changing the way people engage with it is like an important factor, right? Not just thinking about it as this like passive asset, but something that is possible to use. I also want to get into stablecoins with you guys as well, because there's this broader trend in the landscape, obviously, around it. Total stablecoin value is about $250 billion. So with that in mind, how does Mezo's native stablecoin MUSD aim to play a role in that market? And how does it kind of compare to more established stablecoins like USDT or USDC?
What do you think, Yogi? You're in the trenches.
I think two different propositions. I think for us, it's really, you have a BTC collateralized stable with MUSD. That's the idea. It's not going to be as efficient as a treasury-backed asset or a yield-bearing asset like Athena. They have very different markets with very different risks. If I were to think about something passive, this is primarily targeted towards BTC holders and complements well with the USDCs, USDTs, and the USDEs of the world. If I were to use an example of a buddy of mine recently, he's been sitting on Bitcoin for years. He used he borrowed against his Bitcoin and bought his first set of groceries 2 weekends ago. And it was like, hey, this allows me to do stuff without, I'm not going to get into tax stuff, but he listed a couple reasons, one being tax and a couple others where he's like, if I can live my life on BTC, I know I'm not going to be, there's no censorship, et cetera, that you may have with USDC, USDT, and a couple others. I would say that's how I bucket them generally. And then I do believe stables generally will scale. And we're seeing a lot pop up. Matt, I'll give it to you.
It's incredible. The way I break it down, we're not trying to compete with USDT. I've watched Tether Truthers over the years fall one by one. And it's like they have just done an incredible job, and there's not a lot more to say. But the reason that I got into this space is not to be the biggest net buyer of US Treasuries. Like that's not my goal in the space, and I have no problem with it. I think stablecoins are super useful. They solve a lot of people's problems. But when I look at Genius and some of our regulatory changes, we're seeing that a lot of the yield is not going to be passed on to end users. A lot of the yield behind USDT and USDC, it's difficult to do that from a regulatory perspective. So I don't know. I guess what I look at this as is we have a group of people who just want USD. They don't care if it's USDT or USDC or anything else. They just want USD. And that's mostly emerging markets, right? Those are people who it's like, my local currency is not serving me. I'm looking for something to save. But the idea of saving in Bitcoin is like a bridge too far. Those people are also interested in payments. And then you have another group of people on the other side of this barbell, and they're Bitcoin holders who want to make their money useful, but they are not willing to short Bitcoin, which I think you would be a fool. Even when the market is up like it is, it's a dangerous thing to do. So I think that's kind of what we're trying to scratch. For people who are deeper in the space, what might DAI look like if it were censorship resistant? What might DAI look like if it were primarily focused on Bitcoin and if it were simpler? And that's what we're trying to do with MUSD.
But then you brought up emerging markets too, Matt. I'm glad you did, because that's a very different focus when it comes to stablecoin value compared to like maybe something in the US markets. So how does that kind of differ when you're thinking about MUSD from emerging markets to then more established markets like say the US or Europe or
Yeah.
something?
So when I look at the West and when I look at the US, which is where I live, and I'm one of these people, I something like Athena is perfect because the what they're doing is they're tokenizing an opportunity, a yield opportunity that most of us are too lazy to do ourselves, or that we are doing, but it's a pain, And the same people who want the yield are the people who create USDE. So it's actually like, it doesn't surprise me that it is the one huge growing stablecoin relative to these others. But then when I look at USDT and USDC in the US, I'm like, there's not a lot of need for this. It is more convenient to me to be able to use it outside of banking hours for real. But then I look at the rest of the world and I think like, okay, well, the US has already weaponized SWIFT. So there's a group of people who are sensitive to that. And USDC and USDT are an extension of that. And then I think there's another group of people who they don't care. But what they do want is they want something that says USD. So when I look at, for example, the corridor between like Argentina and East Asia around beef, for example, like this is a corridor that there's not a huge attachment to USDT and Tron. There's a huge attachment to settling in USD. So I think that's where in these markets is more of an opportunity. But obviously the one that I'm most excited about has very little to do with remittance or these channels. It's actually rewards. So this is why we bought Lolly. This is why it almost feels like going home a little bit. I started this space in payments, but we quickly pivoted to rewards. And we've realized like, if all of these people just need access to USD and digital assets, there are already business models that do that in the reward space. And so that's our focus, is just pushing out Bitcoin and stable coins to the rest of the world who want to be a part of this movement. And then, kind of using that as our funnel to greater usage.
What would you say are like some of the big scaling hurdles though that you face on this front, whether it's like with the Lolly acquisition or more of like a global perspective? How do you think about like capturing the market on that front?
Yeah, so obviously I think in barbells, you're going to hear me say it a lot. Like a big part of, so if you're Athena, growing a new stablecoin is about getting very sophisticated people to mint a lot of it. That's it. And then the rest is like, we'll do it later. But if you're trying to grow like a stablecoin that's more focused on payments and day-to-day usage, you have two groups. You have your minting group, you have your two-sided market, and then you have your group that are actually like consuming, using this as savings. So I'm not trying to boil the ocean and replace local economies with a new stablecoin tomorrow. We've seen a lot of really credible attempts. Zcash comes to mind, of currencies that have tried really hard to pry open these local markets and they won't get there. Tether did it by being first. And then just getting this like natural, like this growing organic market of agents and all of this infrastructure that's very, very hard to really make a dent in. So what what we're focused on instead is the people who are at home already using mobile apps to earn. Maybe they're watching ads, maybe they're browsing, maybe they're changing their shopping habits. But we're basically trying to take advantage of the attention economy and how money already moves. And we're saying, well, instead of getting it in points or in real or in the Argentinian peso, you should get it in MUSD and you should get it in Bitcoin. So that's really how we're trying to get after that side of the market. I hope we'll be able to cross the chasm. But yeah, it's tough. It's tough to grow a new product like this.
Yeah, Yogi, what are your thoughts on this front? What are some of the scaling hurdles?
I think it's a lot of it just compliance and in market, getting like the fiat to stable pairs, getting people to fully understand what it is without having to read too much, because people like the attention spans are short. Being able to understand this is a BTC collateralized loan, it is against myself. There's no hypothecation risk. There isn't like an overall system risk tied to this. I think that the USD aspect is a lot easier because people want USD. If you look at any of the emerging markets, I was just in India maybe 4 or 5 months ago and I ran out of the rupee and I was like, I have cash. And the guy was like, dude, I'd love cash. Like, I don't care if you don't have rupees. I'll like pay me in cash. Because for them, it's like, at least I always know that the dollar is going to hold value. And even if the rupee moves up or down, they're usually hedging, where like if it falls more, we're like, dude, I'll take the cash. I don't care about the exchange rate. Just pay whatever. And so I see the same here. And I think it's just getting people to accept that, hey, MUSD is not inferior to any other stable product because it's always one-to-one redeemable for BTC. And we're also, I believe, as this idea of hyper Bitcoinization plays out, that, hey, we're going to move to a world where BTC is more accepted. You know, you had like 3 years ago, Jamie Dimon's like, Bitcoin's a scam. 2 years ago, Bitcoin's a scam. Today, Chase is now allowing credit card purchases on Coinbase. They have an ETF. You have Ray Dalio saying 15% of a user's portfolio should be in BTC and US in gold. I think as that like social acceptance scales, this gets a lot easier. But it is, you know, you're changing literally the psychology of a large group of individuals that are looking at something that for the last 10 years has been like, hey, what is this? To like, oh crap, there's like real value here.
In a lot of ways, stablecoins are helping the world bridge to this new economy. And when you look at it that way, it's like, well, treasury-backed stables are inferior. They're not native. So I think we have one step, which is, okay, traditional folks are going to pile into these treasury-backed fiat stables. And then as they start moving to a Bitcoin standard, well, you should hold more Bitcoin. And the only way to do that and have USD is to borrow against it. So I think in some ways, this is a 10-year bridge to the new economy, which is, well, everything should be Bitcoin backed, but then no one will want to spend it. This is what happens when you have a deflationary currency. And the way out of that is easy lending. The nice thing about the world that we're building here is that you can do that self-custodially, or at least as close to self-custodially as you can. So I think that's a huge improvement. You know, sometimes when I see stablecoins, people get cynical because they're like, well, great, we've rebuilt the old system. And it's like, okay, well, now you have 24/7 settlement, right? Now you have open financial access. It's not just whoever has access to an FTP server. But then you go a step further and you're like, well, actually, now you have Bitcoin and you're borrowing against it, and you're actually not relying on a bank to even issue the stable. So I think that's kind of the bridge to the Bitcoin standard.
Yeah, and two things I want to add to that is
we're excited.
In 2020, 2021, only banks had access to Signet and Sten, where you could do 24/7 banking with Circle and Tether, and you know. And then you think about this, it's like, all right, I need cash, I need it now. It's the weekend. Where do I go get it? And I feel like there's a democratization that's happening where the access is increasing. And then the second part to that is when you think about any other asset, like I just took out a credit line against my house. How can I open credit lines against BTC? You can do it with your 401k, but they're very predatory rates. Like it's your own money, but you're not allowed to but you have to it took my dad like 3 days to get approval because he's like, I want to buy some crypto asset. His 401k issuer is like, oh, you're not allowed to buy this here. You have to go somewhere else. And it took him like 2 weeks to get paperwork. He had to get it notarized. It's his own money that he had to go to the bank and say, I want to move this out of this Vanguard account into this account so I can buy Bitcoin. It's just like, and that's where like, you don't have those issues anymore. So I wanted to just.
My mom tried to make a wire and to help a family member with the house purchase. And so I was like, oh, I'll go and I'll help you. I'm sending wires all the time. And they kept saying, they said they would do it and that it would clear. And so just before cutoff time, I called them and it hadn't gone through. And I said, this is strange. Can you confirm? So we have to go back into this place. And then we found out that because a family member was with her, they thought it was elder abuse. I didn't come in angry. I'm just like her. I'm a normal guy trying to help his mom who's a little older, you know, like make a wire. And it's just such an intense demonstration that it's not your money. And, this is obviously not the world we should be living in. And I think the nice thing about something like MUSD is, well, it doesn't matter. You can always get back to Bitcoin immediately. Definitely doesn't matter if it's the weekend. It doesn't matter what the bank teller thinks.
I think a lot of times too, it's like you don't think about these things until it actually happens to you, and then you're like, wow, the system is screwed up. Like what we operate in is very different than what it should be.
It's crazy we've gotten this far, but here we are.
We've got this far just to come this far. No, we're going further. On that topic, with the stablecoins in mind, what are kind of the new yield strategies or app integrations that you're hoping to add for MUSD to make it kind of like a cornerstone within the Meso ecosystem, but also improving like the current financial rails and systems that we have in place?
Sure. So Yogi, you want to talk a little bit about Upshift, and I'll maybe talk about some of the infrastructure?
Yeah. So I think on the yield side, we wanted to create a product for everyone. So we have like the self-serve. You can go into Mezo, mint stuff, explore stuff, do stuff actively. The Upshift stuff is a lot more passive. Hey, I want to remain long my BTC, but I want someone else to do the work for me. And we also wanted to increase access to other ecosystems, knowing that, ETH has a ton of liquidity, other chains have liquidity. So our first vault that we deployed was a BTC vault on ETH. And so that's for a lot of users that are like, I want to be able to tap into these liquidity opportunities, but I don't want to do it myself. And what Upshift is doing on the back end is minting MUSD against it, deploying pairs, kind of bootstrapping our liquidity because we're starting to scale now. And so that means like seeding our pools on Tigris, which is our in-house DEX and the liquidity market. It's starting to basically arb between different pools. We have other stablecoin pairs going live. As of today, I believe the announcement's maybe out or maybe not out, but Lil Alpha will have like a wormhole bridge coming so you can bridge MUSD to ETH. So that's what the BTC vault does. And then we have an MUSD vault on Mezo mainnet that does the same thing where, hey, I want to borrow against my BTC because the 1% rate, I want to lock that in because that rate can change in the future. It's at 1% today, but as soon as you open that loan, it is your rate for as long as you keep the trove open. And so for those users, again, it's deposit into the Upshift vault on MUSD, and Upshift will arb pools. We have a couple protocols starting to go live, BitFi, a lending market. We have Zero Lend, Velar is a perps market. And then we're trying to get MUSD on other areas where people are actively trading, whether it's on-chain options markets, on-chain perps on other chains. And so really basically create people like the ability for people to trade or do whatever they want with MUSD. So that's where like the yield strategies on the vaults come in. And then Matt, I'll give it to you on the infra.
Yeah, I mean, I think the underlying philosophy that we follow on all of our projects, but especially with Mezo, is we're looking for the safest opportunities possible. And so what I mean is we go out of our way to stick with products that have existed for a long time, code that's existed for a long time. It was important that we built this whole chain on top of TBTC because it's been live for 5 years now with almost at this point $750 million in it. And so we really just want to focus on products that have Lendy. And I think for a lot of Bitcoiners who haven't really gone on chain since they bought their Bitcoin, we're trying to give them just something that's safe. I don't really want to see a replay of early Ethereum DeFi. As fun as 2020 was for those of us who were very technically astute, 90% of people kind of got wrecked, and we don't want to see anything like that going on. So that's been really the other focus of ours. It's having yield for a whole bunch of different kinds of users, but it's also having something that you can just trust and be confident in.
How does that kind of vary between like the retail audience with institutional grade strategies?
Yeah, I mean, retail has more of a risk appetite for sure. And I think, you can have more meme driven yield. I think a big part of our working with Lolly, and actually we have another acquisition we're getting ready to announce shortly, is about helping people who are retail, but who aren't meme coin traders. Like helping people who have expressed an interest in this, but who wouldn't say things like they're in the trenches and they don't know the latest like CT lingo and stuff like that. So that's really been what we're trying to achieve, and then to give them something that other apps can actually expose yield directly in SDK style. So that's been the idea so far. I'll have more to share in the next couple of weeks as we see that develop. So.
I wish you could tell us now, Matt. Come on, give us like a little bit.
I know the alpha leaks. Here's the some things that I can share that we'll be dropping shortly. So let's see. We have pools obviously that are dropping right now. We have our initial vault infrastructure. We have kind of like vaults 2.0 coming, And so our liquidity infrastructure is called Tigris. So obviously there has to be Euphrates. So you'll see kind of this new vault infrastructure rolling out, making yield easier. And then we're also going to finally be launching Bitcoin staking. So that's where things are going to start getting really interesting, and the chain actually starts to be run by everyone rather than kind of this like middle step as we're launching. So really interested and excited to see people actually getting yield and kind of taking the other side of this trade for lending. If people want access to equity on one side of the market, you have yield generation on the other side of the market. And it turns out, I mean, this is obvious to me, but I don't feel like it's obvious to everyone. The only native yield in Bitcoin is lending. Every other time someone talks about yield, it's fake. You know, it's someone printed a token. It's that someone is telling you, no, that there will be yield later, and don't look under, you know, kind of the covers. And so I'm really excited because this has been how people have been earning yield on Bitcoin, at least since I joined the space in 2013. So yeah, we're excited to actually start democratizing some of the things that OTC desks have done for a very long time. And yeah, so more to come, but there's the alpha leak.
For sure. I appreciate it. You know, I had to ask, I had to push a little bit there. You talked about yield generating products. What do you kind of think of the current landscape for them out there? And what makes a lot of them maybe not so great, or some that are good that you could shout out?
Yeah, I'll stick with some Bitcoin native stuff, and then I imagine Yogi's gonna have some more like longer tail thoughts on kind of crypto native solutions. I think that you know, and no shade, but I think that Babylon was really disappointing for a lot of us. I think that you know, this is a very hype project, and I'm a fan of David and the team. But as I saw things coming together, I saw the expectations getting higher and higher and higher, and I kept waiting to see, well, where's the yield going to come from? You know, and Jameson Lopp has reused the, you know, there's a goose chasing me. Where's the yield? Where's the yield? Like, where does it come from? And that's really a question you have to ask yourself. If something sounds too good to be true, where does it come from? And so I think a lot of Bitcoin yield products in particular have underperformed. I think in the wider Ethereum and Solana kind of like crypto platforms, you actually have some really cool stuff going on. So it's going to be interesting to try to actually bridge the two. Yogi, you might have some thoughts on yield platforms outside of Bitcoin native stuff.
Yeah, no, I think yield can be good, but I think it's been abused a lot for the past 5 years. Like since 2020, that year of the yield has been like a prevalent meme, and I think that is deterring people to enter the space because they don't fully understand the yield and the figures. I also think that it is a great mechanism to grow, but it's a massive social contract that you're building with the users, and sometimes expectations exceed what's going to end up happening, given that the money can't be printed out of thin air. This is not an algorithmic stable coin that you're going to just be able to change and pump and someone's going to want to care on. I really like what Athena's done with USDE. I think they've been able to conquer that basis trade and be able to hold it. It's gone through some drawdowns and they've been pretty healthy. I think that's, in my opinion, so far, one of the safest. And then seeing some of the things that are happening on Hyperliquid, yield bearing primarily because so many people are using the platform that it's generating so many fees that the yield makes sense. And then you can build products around it. So what you realize is that there's one core fundamental foundation that a product's building on, and it's really winning. And that actually allows the yield to then start passing. It gets the engine going. It's like a cold engine problem. You want to like get the lubricant in there and warm it up. It's like a cast iron engine from the 50s. And once it's running, it does really well. Sorry for the car.
But even then, see, Yogi chose so like hype is awesome, but that's perps, right? So like even then, that's a product where a lot of people won't really understand where the yield's coming from. And I think you also have to look at just like good old faithful Aave. That's yield. It's simple. It's money market style lending. It's clear where the yield comes from. It's transparent. It's not perfect, but it's good. And I think there's a little bit of back to basics, right? Like I think you have some really standout options like Hyperliquid, but I also think LP fees can still print. Lending can still print, especially when in Bitcoin, you know, your risk-free rate is 0. There isn't a risk-free rate. It's not Ethereum. It's not Solana. And I think that's something that Bitcoin holders there's a reason they want to remain passive, because they want a risk-free rate. And I think our goal with these next few releases is to give them the closest approximation, right? To give them, we know it's not zero. We also know it's not, 10%. So can we find a market equilibrium where people can make money, people can access their equity, and they can all understand where the money flows? And I think that's the key. Like, what's the point of open finance if none of us can actually understand the finance? So.
No, I agree 100%. I think we've covered a lot of ground on the front of like the infrastructure, financial use cases, and then the mechanisms driving yield and stability. But I also want to dive into the community and ecosystem. The team recently announced the formation of Supernormal Foundation, which is a community-driven nonprofit designed to cultivate ecosystem growth and guide kind of this progressive decentralization of Mezo. Aside from the obvious of getting developers to build on Mezo, what was kind of the initiative really hoping to accomplish? And then are there any types of like dApps that are being built right now that you two are interested in or kind of reflect
Yes.
Mezo's vision? I'm sure,
Yes,
yes,
yes.
but I have to ask.
Yeah. So we've taken a bit of a different approach here. One of our like kind of core tenets is that we don't think Bitcoin needs another Ethereum. Like, we don't think Bitcoin needs to become Ethereum. I think Solana exists. Like, if you're a developer, like, Solana exists and it's fast. So when I look at Ethereum and when I look at Solana and I look at what do people need, borrowing, lending, trading, perps, options, maybe. We don't really have product market fit with options yet. We're starting to see it. So it becomes like it's a pretty fixed number of primitives. Names, ENS, domain name systems, all of this stuff makes sense. But it's not the world computer. There's a lot of cool stuff that can be done, but it doesn't have product market fit yet. And so the way that I look at it is, well, in a world where Bitcoin and Solana are crushing everything in the middle, where you have something really fast and you have something really solid and time tested, the apps you want are a little bit different. So instead of like this big focus on grants, we focused on building first party. And now with Supernormal, we're finally ready to start kind of expanding. And so the focus is not going to be the 10th compound fork. Like, that's really not interesting to us. What we want to see is two things. One is on and off ramps in local economies. So how can we move from a new stable to ubiquity? How can we move in particular regions, right? Not global, because that's insane, but just particular regions. We're really interested in Argentina, we're really interested in Mexico and Brazil and in Turkey. These are pretty obvious spots, but we're gonna focus. And so that's one on the Supernormal side. And you'll notice Andre, who's our executive director, comes from MoonPay. And that was a very intentional hire, right? Is we want people who are thinking a lot about that very top of funnel. And the other thing we're interested in is fun. So, like, there is a lot of fun on Solana and on Ethereum, and we want people to be able to play games with their MUSD and with their Bitcoin, but without treating it as like trivial. We still are trying to build something for adults. So we have some apps I'm getting really excited about on the gaming side as well. But just think like, choose your favorite game, and if you can make it PvP for money, it's a winner. So I think we're looking for opportunities where you're playing Wordle with each other and winner takes the pot type things. So really focused on that. How can we get new markets, access to MUSD, and then how can we have fun and help people who maybe didn't have a crypto asset before have some USD.
Fun is important. I feel like sometimes people forget that and they just
Yeah.
go full crypto casino. But
I think some people's definition of fun is like just a little twisted.
Maybe that. Yeah.
Yeah. We're looking for like a little more family fun, a little less.
Yes. There's also the Mezo pool is launching tomorrow. What kind of opportunities do you guys hope to create for liquidity providers, the broader BTC-Fi ecosystem, and honestly, just like the whole space with this initiative?
Yeah, it's basically the kickoff for how people can start creating pairs beyond some of the pairs that we've kicked off. It allows the community to basically interact, become a participant in the economy that we have. Because as of today, most of the liquidity comes from Treasury or some of our liquid fund supporters. And so with the pools, it's now a user-friendly UI. You don't need to use smart contracts. It's really like V1 There's going to be a lot of iterations on this that come out, but it allows us to start creating depth and getting people to use this at scale. Like our goal is that how can we basically build a AMM where people can move, millions of, like if you want to finance a house, you're going to need a lot of liquidity and size. So how do we bring access for this to everyone that they can use? And then also start to understand, hey, we've thought about these pairs. Now, what does the community think? Like what pair should we be adding to this interface? And how do we start rolling that out and expanding it? So now it's the point of like expanding the growth and letting the community participate a lot more without needing API integrations and smart contracts to work.
Yeah, I mean, getting like dorky and a little selfish, but I'm getting ready to refinance my home. So like as the pools launch, I'm like, great, this is what I needed. Who wouldn't want, 1% against their Bitcoin? This is better than a mortgage, right? So yeah, I'll be moving my house to fully collateral backed, and I'm excited about that. I think the other piece that's exciting is like, this is where we get to like the crypto native piece. I mean, we started with a chain and then a simplified version of Maker. And now we're adding Uniswap. And you start to layer these things together and you're like, okay, well, if this is all controlled by Bitcoin holders, what can you do? Like what's different? And I think one of the things I'm excited about with the pools launch is the next launch. So we have pools, great. People can put forward liquidity. Then Bitcoin holders can start voting on where the incentives go. And I think that's where this is going to get really fun is people trying to slosh money around and kind of the games we've all seen with Curve and with Aerodrome on the crypto native side, except for it's a whole chain. So I think that's quite cool. And then obviously, yeah, I mean, it's just another step closer to ubiquity. So
amazing. Well, there's a lot to keep our eyes on going forward. Matt, Yogi, thank you for taking the time to talk today. And thank you to everyone for listening in. Looking forward to discussing future endeavors again soon in the coming months.
Thanks
for having us. Appreciate it.